Shelbi with Lusk Mortgage Group. Welcome back for week 2 of our 120-day home buying homeschooled edition course. So today we're going to be talking about something really important. When you're going to apply for a loan, the first thing the bank wants to know is, can you repay the loan? So today we're going to be talking about how we calculate income to show proof that you can in fact repay the loan, or show the circumstances to which you will be able to repay the loan. So there's kind of some special circumstances that go into turn with income. When we're looking at it as a general rule of thumb, underwriters or lenders are looking for a 2-year income requirement. So what that means in turn is, let's say that you've been at the same job for the last 2 years. Well, then that's easy, right? We can easily show that you've been at the same job for the past 2 years, and we'll use that income. Now, if you're a salaried employee, for instance, at that same job for the last 2 years, let's say last year you made 50. Well, this year you're going to make 60 because you received a raise. Awesome. We're going to be able to use that $60,000 as your qualifying income rather than taking an average of those 2 years. So when we can show that you're in a career path, for instance, that you're constantly inclining, we'll always be able to use that inclining when it's salary based. Now, that's not the case for everybody. There's hourly jobs, there's hourly plus commission jobs, there's salary plus commission jobs, there's strictly commission, and then there's self-employed as well. So there's a variety of different options that can occur within your income, and we're going to talk about how we come to calculate those. There's actually going to be a worksheet here provided for you as well for our self-employed buyers that want to figure out exactly what their qualifying income would be. And trust me, that's important, especially with this time of year it is. If you're self-employed, you're about to go file your taxes, most likely. If not, you're going to file an amendment in April to file them later. And talking with your CPA as to what you need to maybe don't write off this year, or different things like that, so you can in fact qualify for your home, that this might be important and relevant for you. So for starters, we'll just start with general, that 2-year rule. Well, there's a lot of people that have freshly gotten married, they've just graduated school, and now they're ready to buy a house. So what happens in that circumstance? Well, let's say that you just went to KU, you completed 2 years of school to, maybe do business management. Well, you've been offered a job in some way or form that revolves business management. So what we would do in that circumstance is, you don't have 2 years employment history because you've been in school this whole time. Well, what we can do in lieu of that is show your 2-year transcript from the school that you completed it, and an offer letter from an employer that's wanting to hire you with said income listed there, and you can qualify for a home with that alone. Now, in another circumstance, let's say that you went to a trade school, right? Maybe you went to a trade school for 2 years. We can use your certificate or your degree of some sort of certification that you'd completed the course, along with a job offer as well, or your first pay stub in lieu of that 2-year history. So when we say 2 years, we just need to show that, hey, for the past 2 years, you've either A, been working towards being qualified for a job that's going to provide X income, or you've already been in a field for 2 years that's providing X income and has the ability to grow, or you're in the career path that you want to stay on. Now, there's different circumstances though. Sometimes people are at a job for 2 to 5 years, and you decide that you don't want to do that anymore. That's okay. If you're making a change that makes economical sense, let's say you've been at a job that's been paying you $12 an hour for the past 4 years. Well, you have an opportunity to jump into a completely different field, but that job's going to pay you $13 an hour. Awesome. Let's see 30 days worth of pay stubs at that new job, and that'll be your new qualifying income. So I know this might feel like a lot of information all at one time, and we are going to have a handout here as well that kind of breaks this down for you to talk about the different types of avenues and the different circumstances. But feel free, if you have questions, you have comments, feel free to private message us, feel free to comment below, and we'll get back to you about your specific circumstance, just because there's not a one-size-fits-all. With income calculation, there might be a different circumstance for every different type of job. So jump into another category here for different types of income. Let's say that you got a job as maybe you're a liquor distributor. Well, most people in that position will have a base salary plus a commission. Now, that commission isn't necessarily income you can qualify with. What we would have to see is that you've been receiving that commissioned income for 2 years, and that it's inclining. If it's declining, then we're going to be using the lesser of those 2 years for your qualifying income, if that makes sense. So again, keeps going back to this 2-year rule, right? No 2 years, it doesn't work. So those hourly jobs, it's easy. We're just using whatever your typical hours is over a 2-year time period and what that hourly income is, and that'll be your qualifying income. If you have a salary, we know for certain what you're making every month, so that makes that really easy as well. It's really just getting more complicated just for qualifying and figuring out exactly how much of your income you can use to purchase a home when we're receiving commissions or a base plus commission, or we're self-employed. So to jump kind of over to self-employed income. When we're talking about self-employed, there's a variety of factors that are involved. It's actually fairly complex, especially if you own a business that's incorporated or has an S Corp, you file a K-1 or something like that. Really cool thing about this form though that's going to be attached here, it tells you exactly what line items we're looking at a tax return to calculate that. So you're going to get a really clear idea as to what you're using. If you're confused about the form at all, feel free to reach out to us. I'd be happy to fill it out with you to make sure that we're looking at the exact same thing, because I'd hate for you to look at that form, think that your qualifying income is X, and it turn out to be something else, because when the underwriter goes through and fills it out, it may very well be something different. So that's something for us to talk about. But with self-employed income, underwriters looking for 2 years again. Who would have figured? That 2 years is really solid number here in the mortgage industry for qualifying income. So let's say that you've been in business for 5 years, but the first 3 years of your business, maybe you were working for somebody else and you were a 1099 employee. Well, it's still a commission job, right? But you went and got your own company doing the exact same thing you were doing. Well, there's a circumstance there that could be explained to show the average of income, but it all kind of goes back to circumstance. To be safe, we're looking for 2 years of filed tax returns for proof. And then a profit and loss statement can sometimes be used to show proof that your business is continuing to grow. But again, unfortunately, it all comes back to special circumstances, and it's really something we should talk about directly, or you should talk to about with a loan officer to go through how your income would be calculated. Now, if you have any questions in regards to any of that, feel free again to private message us, comment below. We look forward to speaking to you again soon. Next week, we're going to cover some more awesome material. Hopefully this kind of gave you a glimpse as to what we're looking for when it comes to income and what to maybe expect in the coming months. Thanks so much.